everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. Thanks for joining me today. Glad you are here. Coming up on the end of the year, and there are a few topics I love to cover near the end of the year, and one of them is today's topic, which is the solo 401k plan. This is a great plan for solo business owners, as the name implies. As you know, I love working with entrepreneurs. I've been a business owner for like 25 years now, and entrepreneurs are kind of my wheelhouse and my sweet spot of people I love to help, in addition to a lot of other people. But as being an entrepreneur, I have a special kind of expertise in that area as well. So I talk to a lot of people about launching and starting businesses. And what I'm going to talk about today is very specific to solo business owners, for one-person businesses, or micro businesses that maybe have one or two additional part-time team members. And I'm going to talk a little bit about a specific type of account, an investment/retirement account that is a really great account type, or really a great vehicle for this type of business owner. So that's what I'm going to talk about today, the solo 401k plan. So let's jump in and learn a little bit about what that looks like. So first, I'm going to set the stage by talking about options that are available for solopreneurs. So, and again, the word solopreneur is a little bit jargony, I know, but it's kind of out there, so I'm going to go with it. So a solopreneur, in my definition, is someone who is a single business owner. They are the only person in the business, or they might have a 1099 contract assistant working part-time, or maybe even a part-time employee or two, just kind of minimal help, but really they are the business. Some examples might be consultants, real estate agents, graphic designers, one-person marketing agencies or web designers, any kind of consultant that, they are the product. They're the ones doing the work. Real estate agents, I think I may have mentioned that. So people that they're doing the service, or they're doing the work, and they are the business. So let's talk a little bit about some of the retirement plan options available to solopreneurs. There are some limitations. Obviously, they don't have access to a big company 401k plan, et cetera, but they do have a few options. So let's talk about the options, and then we'll pin down the specifics of the solo 401k plan. So one option is a traditional or a Roth IRA. These are pretty much available to anybody with earned income. So as a solo business owner, you potentially have the option of an IRA, either traditional or Roth IRA. You could also do potentially a simple IRA. This is sort of a miniature 401k type plan where it's a pre-tax money account. You can set something up pretty simply, and that's called a simple IRA. A SEP, or a simplified employee pension, is an option as well. That's somewhat popular among solopreneurs. A SEP, again, is a pre-tax plan. Has some limitations we'll talk about in a minute, but that is one option for solo business owners as well. You can also do a taxable brokerage account. You can just set up a regular old unsheltered brokerage account, unsheltered meaning not sheltered from taxes. It's a regular old brokerage account. You can put the same type of investments in it as you would any other account, and it's grows not tax deferred, but it has after-tax money going into it, and it is taxed on the gains as well. So there's no tax sheltering, but there's no limitations really. And then the one we're going to talk about today is the solo 401k plan. So let's talk a little bit about the limitations of the other types of accounts before we dig into the solo 401k. So some of the limitations of the SEP and the simple plan. There's no Roth option. Roth is, I'm very pro Roth. I love Roth contributions. Roth contributions grow tax-free. So when you use a Roth account, you are putting money in that has already been taxed, and then the growth grows tax-free. So when you withdraw that money later at retirement, all that money is tax-free, which is phenomenal. So I always like to joke that your 60-year-old self will be really happy with your 30-year-old self if you choose Roth now, because having all that money tax-free as opposed to taxable is going to be a big advantage and make you a lot happier. So with the SEP and the simple, there are no Roth options. It's all pre-tax money. So you have that only option being pre-tax. Other limitations, the IRA and the SEP plans can have low contribution limits. There are limitations of those plans. The IRA, for example, can have a limitation where if you make a certain amount of money, you can't contribute directly to a Roth plan, or the tax deduction won't be available in a traditional IRA. So the IRAs have limitations when it comes to contribution income limitations. Also, they have low contribution limits. The IRA limits you to $6,000 per year if you're under 50. If you're over 50, you can do $7,000 per year, but still, that's a fairly low amount. The limitation is fairly low. There is the tax sheltering that is not there on a taxable account. So if you're going to use a taxable account, the flexibility is there. You can put whatever you want into it, withdraw whenever you want, no limitations on income, but there's no tax sheltering. So all of these popular plans are available, but there are certain limitations on each of them, whether it's low contribution limits or gotchas when it comes to the income limitations or the tax issues or no Roth options. There's always kind of some limitation to all of these. So this is where I like to talk about the solo 401k plan and all the advantages it comes with, which can overcome some of these limitations. So here are the characteristics of a solo 401k plan. It has a Roth option. You can contribute up to $19,500 per year as a Roth option. You can do a pre-tax option as well, but I think one of the whole points of doing a solo 401k plan is to have that Roth option. So having the Roth option is great. It's one of the larger contribution limits you can have. For example, a simple gives you, between $12,000 and $13,000 per year you can contribute. But the solo 401k gives you the full benefit of a 401k plan in that employee Roth contribution option. So again, you can put up to $19,500 per year if you're under 50. Over 50, it jumps to 25. So it's a big limit, a big contribution limit you can fill up. The total limit as of this year, actually as of 2021 coming up, is $58,000. As long as it's up to 25% of net income of your business. So you can put up to $19,500 in Roth, or 25 if you're over 50, and then you can total up to $58,000 when you include the business pre-tax option. So you can put a whole bunch of money into a solo 401k. So the limits are very, very high. Also, there are no income limitations. So whereas with IRAs, if you start to make over a certain amount of money, they limit what you can do with an IRA. With a solo 401k, there are no income limitations. You can make as much money as you want in income, and you can still contribute to the solo 401k. So that limitation is not there, which makes it very flexible. Also, here's a feature that I don't like to really endorse necessarily, but it is a feature. You have the ability to take a loan against your solo 401k plan if your plan documents allow. So that means if you really need money in a pinch, some sort of event happens where you have to get the money out, you can take a loan against the plan and then pay yourself back. So it's a little bit of a different model than just cashing it out. So it can sometimes be advantageous if you're looking at that option versus just cashing it out. So having the ability to take a loan against the plan may be beneficial in certain limited cases. Again, I don't like to endorse it, but because it's not usually a great idea, but it's there. It's also easy to set up and administer. I often set up solo 401k plans for business owners in about 3 days. They're fairly low maintenance. It just takes some paperwork with your custodian. I use a couple custodians for this, but it's very low maintenance to set up. It's some DocuSigns, some paperwork to fill out, and you can be live in a few days. So that's an advantage where a regular 401k plan can take a lot longer. You also have flexible investment options. So often with other types of investment accounts, you can have limited investment options. With the solo 401k, you can put pretty much anything you want to into it. Any mutual fund available for the most part, depending on your custodian. And again, those tax benefits with the solo 401k, you have the option of either doing Roth or doing pre-tax to lower your taxable income, or you can do both. So again, going back to a SEP or a simple plan, your only option is pre-tax money, which is great. It lowers your taxable income, but you don't get the advantage of that tax-free Roth growth. With a solo 401k plan, you can put some money in Roth and then some money in pre-tax and get the advantages of both in one type of account. So it's really, really flexible and really powerful in that respect. So who is eligible for a solo 401k plan? So the eligibility is based on a few things. One, you must be a business owner with no full-time employees. And what does that mean? So full-time employee is classified by the IRS in this case as no more than 1,000 hours per year. So you can actually have employees as long as they don't work more than 1,000 hours per year. Also, 1099 contractors are okay. So you can have 1099 contractors and they do not count as employees. Now, the caveat here I always like to say is you want to be careful and make sure that your 1099 contractors truly are contractors. This is a whole separate discussion, but There are lots of businesses that misclassify 1099 contractors when they really should be classified as W-2 employees, but they pay them as contractors. So be sure that you understand the differences between W-2 employees and contractors, and you're not misclassifying your team members. So again, 1099 contractors do not count as employees, and you can have part-time employees as long as they don't work more than 1,000 hours in the year. Partnerships are okay. You can have a partnership and still have a solo 401k plan for each of you. So if you're a partnership with maybe 2 or 3 partners, and again, you have no employees or part-time employees that are under that limit, you can still do solo 401k plan. Also, here is another exception. Your spouse can be a full-time employee. So let's say you're a family business where, the wife is the business owner doing the work, and maybe the husband also helps out. The husband is a full-time employee in the business, but not an owner. That doesn't count against your eligibility. That spouse can be a full-time employee and not count against that eligibility. So those are the eligibility requirements for a solo 401k. Again, it's really designed for that solo business owner or a partnership where that is really the business. The business is the owner or owners, and there is little to no additional employee count, or they are all part-time under that limit of 1,000 hours per year. So that's the eligibility. So that covers a lot of businesses. I work with a lot of business owners where they are the only person in the business. It's just them. They're solo business. And this is a great plan type for them, again, because of the high contribution limits available, the Roth and pre-tax flexibility available, no restrictions on the amount of money you can make for contributing, the ease of maintenance. So overall, it's a really, really great plan. And there's no one size fits all, but in general, I recommend a solo 401k plan over SEPs and simple plans all day long. They're typically a better option in most cases when you compare them side by side. So that is the eligibility. So as far as deadlines, the reason I like to talk about this type of plan at the end of the year is because the contribution deadline is December 31st. There are some exceptions here, but in general, just plan on the deadline being December 31st. That is the deadline to make contributions to your solo 401k plan. So I like to talk about this near the end of the year because occasionally I find that business owners, maybe they've got some income that they want to maybe lower for tax reasons, or they have income they want to kind of kickstart a retirement plan or get a, really jumpstart or add a bunch to catch up with a retirement saving. And this solo 401k plan gives them a lot of flexibility and a great option to put that money away, either to get tax breaks now or Roth growth later, and make good use of putting that money to work that they made this year before the end of the year. Also, I want to jump back to one thing quickly that I may have left out and want to clarify. You can be a 1099 contractor and have a solo 401k plan. So you don't have to necessarily have an LLC and be a formal business, so to speak. You can be a 1099 contractor working for another company as a contractor, but you can still have a solo 401k plan because in essence, you're operating your own micro business. If you're a 1099 contractor, you're really operating your own little business, which means you qualify for this type of plan. So be aware that as a 1099, if you are one, you potentially qualify for this plan as well. If you're not sure, send me a note and I can help you kind of talk through it. So again, just wrapping up, that contribution deadline is December 31st. So, if you want to get a solo 401k plan set up, then you'll be able to get one set up before the end of the year if you get in touch with me or whoever you work with pretty quickly. All right, questions coming in on Facebook Live. Got a question here from Leslie. Leslie is asking, is the income limit based on 25% of your gross or net? Good question, Leslie. It's based on your net. So it's based on the business net income, that 25% limit. That's a great question. I'm glad you brought that up. Gross, for just a recap for those who are following along, gross is your top line sales, the amount of money you take in as the business. Net is what you have left over after you subtract your expenses. So if you make $500,000 in sales one year and you have $400,000 in expenses, your net is $100,000. And that is the number that you're going to base that 25% of to calculate your maximum contribution. So thanks, Leslie, for that question. Glad that helped clarify that as well. So again, I love the solo 401k plan. It's pretty easy to set up. You can do it in a number of ways if you want to get one. Obviously, you can contact me if you're a client already. We've probably talked about it, but if not, send me a note if it applies to you. If we're not a client, you can definitely talk to me about becoming a client. No pressure, but I'll answer questions for you and we can figure it out. You can also go to online sources. I know that I won't name names because I don't like to, endorse so directly too much, but there are plenty of big names in the custodian world and the mutual fund world that provide solo 401k plans. So you can look around and do a DIY version as well. Just be aware that you want to, not all custodians offer the Roth option. I know there are some really big name custodians that offer solo 401k plans, but they only offer the pre-tax plan, which to me, you may as well do a SEP. It kind of just defeats the purpose of the solo 401k because that Roth option is so valuable. I really want that Roth option there because there's so much flexibility in that and potential for long-term growth down the road, which will be a big advantage when you use that money later. So be sure the custodian you work with offers a Roth option with that solo 401k. But again, number of ways you can do. You can DIY it, do it yourself by going directly to a big provider and you're kind of on your own, which is fine if you're comfortable, or you can work with someone like me or an advisor to help you manage that, set it up and kind of track it and deal with it. So that's my take on solo 401k plans. I do a lot of them. I love them. I have one. They're awesome for solo business owners. So Leslie has another question. Let's put it on screen here and take a look. If someone has a regular job and own their own business, can they do a solo 401k? Yes, they can. You can do a solo 401k with a regular job, so to speak. You just want to make sure that your total contributions across, let's say both 401k plans don't exceed the maximum. So if you have a 401k through a corporate job, and then you have a solo 401k through a side gig, you want to make sure that your contribution limits don't exceed in total the 401k contribution limits as a whole. So you got to kind of balance that. So the answer is yes, you can do both. That's a great question. All right. So if you have any other questions, definitely you can stick around after the music stops if you're on Facebook Live and we'll chat a little bit more, or you can email me at podcast@elevationfinancial.com. But as you know, the best way to get in touch is go to my website, which is elevationfinancial.com, and click on that big friendly schedule a complimentary money session button on the homepage. That'll take you to a place where you can click and schedule online. I know December is pretty much wrapping up here, but if you want to set up one of these plans, let me know. We can make it work. Or just book something for January if you're thinking about kind of kickstarting your financial planning and getting your finances in order with some help. So I'd love to chat. With that, thanks so much for joining me today. Have an awesome day. We'll see you next time. All right. Thanks, Leslie. Glad you were here. Great questions. You really helped clarify a lot of points that were important. So thank you for that. I know a couple of people have been joining live today. So if you have any other questions, feel free to pop those in chat in the next 5 seconds or so in the comments there, and I'll take a look at them. But otherwise, it's been great having everyone with me today for the live. And Leslie popped up with another comment there. Just want to throw those in there. All right. Thanks, Leslie. Those were really good questions. I'm glad you brought those up. I should have put those in the main kind of discussion. So I'm glad you added those on. They were great clarifying questions. So, all right, everyone. Thanks so much. Have an awesome day, and we'll see you next time.